and let's dive right in. Every call that I do will be posted on the YouTube channel because I stopped hosting my calls on Google Drive because sometimes it's like too many links to send. So I just want to put it somewhere so everyone can go and watch them on the YouTube channel. So let's start. Um, we take 5 minutes first. I need to show you how we trade, okay? Because I heard someone was here for the first time, I want you to see how we trade. Here it's a 15-minute time frame on euro dollar, okay? We don't have a specific pair that we trade. Why? Because our strategy is based on two things that's concern all the markets that you can have is the candle formation and liquidity. Okay, these two things here, these two notion or concepts are the building stone of everything we do. So if I go here, let me go on the daily time frame. Do you see this? This is a daily candle. How many days were bullish? 3. Okay, but at some point we had a reversal. But this is when we know price has turned. We are right like 8 times out of 10. I will focus on this one so you can understand the formation of a candle. First of all, if I go back in time and take it here, take it back here, now you can see what price do here. We are taking 5 minutes just to explain the first concept, which is candle formation, and the second is liquidity. Then we have structure, direction, entry, all that stuff will come later. But if you understand how the candle forms and how liquidity is swept, then you can predict sometime accurately where the market is going to go. So here, look at this. You have price sweeping these lows. This is a daily candle. When I go inside of the daily candle, I go in H4. What do I see in the H4? We mark this sweep together, right? We also have another sweep here on H4. So now, not only that price swept liquidity on H4, it also swept on daily. If you come on the line chart, what do you have? We have lower highs that has been swept by this big bullish move. So this trend line has been swept here. We don't trade trend line, but I'm just showing you that the direction has shifted. But we mark it like this. We take the last few bearish candle before the sweep. Let's go on H1 so you can see properly. You see, we have 1, 2, 3. This move here is where market changes direction. So we can mark this as our change in direction or change in the state of delivery, whatever you call it. Okay, we know price has shifted the direction now. But this is on 1 hour. Remember, when you're watching the 1 hour, you don't know what the daily candle will do. What time is it? This is 4 p.m. Now, when the market closes, as soon as you see this gray box, like here and here or here, you know it's the Asia session. And my Asia session is from 5 to the midnight open, the before 1 a.m. New York time. Okay, so this is when I will focus to see how liquidity form for my Asia session. Now here, this is a range, right? We have a low here, we have a low here, we have a high here, and then a high here. When you have a trend, you create lower highs and lower lows. But at some point, look at what price did here. Stopped creating lower lows or lower highs, created now a higher high. This is a shift in market direction. Okay, it happened inside of our candle, inside of our daily candle. Now, as I'm on 1 hour now, I know there's a shift in direction. This is a range that I'm interested to trade. I will watch price play out inside of this range using my premium and discount principle. The 50% of this range will tell me where we are according to price. As soon as price touch my 50%, I can drop now on a lower time frame and see if price will give me another change in direction. And then from this change in direction, I will watch price give me a buy, okay? And this is how we trade. But now, it's not easy to spot. Why? Because you don't know where liquidity is. Because look at what price did on the next day. You see? So from where I showed you, if we go back on M15 and we mark there and take a trade from this break of structure and protect below here, now tell me, this was a wrong trade or a wrong direction? You see how we trade? We anticipate the move, we anticipate what price we do, but we spot the sweep and the manipulation. And another thing that we use, apart from the candle formation, because the candle forms, but these are phases. Market open, create a consolidation, then a manipulation, then expansion, and then price will stop somewhere for a pause. This is how the bullish candle forms, okay? And the bearish candle forms, it opens somewhere, create a high, create a low, then close bearish. Let me show you how. Let's go here. Let's mark this chart with session breaks. So every line you see here, it's 1 day. So today is Tuesday, right? So we have Tuesday here. This is Monday. So this is Friday, right? This is Thursday, and so on and so forth. But what I want you to understand is, how did the candle form? The candle of what? Of what? Of the day. Look at this one here. We opened here. We came, created the low. We created the high and closed here. This is what I showed you. How the candle formed. Bullish candle. Okay? How does the bearish candle form? You have it here. We open here. We create the high. We dropped and close here. Okay? This is a bearish candle. Every time you will see this formation. But what I want you to understand is, price will create a consolidation. So in consolidation, liquidity is built. Okay? In consolidation, liquidity is built. What happened next? Manipulation. In manipulation, liquidity is swept away, or it's neutralized. Do you see that? I want to close the break. Yeah. And then after manipulation, you have an expansion. And what does that mean? Now liquidity is distributed. Okay? Now see, after expansion, what do you have after expansion? You have a pause. It could either be a consolidation again or a retracement. What is a retracement? Retracement is when we rebalance liquidity. Rebalance means we bring price to a fair level. Okay, the market will bring price to a fair price. And after the retracement, we could have another manipulation or an expansion. So when you understand these are market phases, okay? Market phases, you have consolidation. You have consolidation here, then manipulation. These two always work together. Then after this, you have an expansion. Expansion is what we trade, okay? Retracement is telling us to prepare. Either we are gonna continue the same direction, or sometimes a retracement will end up being a consolidation, then price will reverse, okay? So after the consolidation here or a retracement, you can have, you can have another expansion and to continue the same direction, or after that continuation, you have a straight change in direction. That's called a reversal. Price will only do these things, okay? Either it's consolidating, either you came in a manipulation, either you found price already going in expansion, then you have to wait. Then if price is consolidating after an expansion, okay, or a retracement, and then either price is doing reversal. Now, what should you focus on? Because these are too many phases. You ask me, okay, what should I trade? You only trade and target to get involved, okay, in the expansion. We only get involved before or during an expansion, because you want to catch the big move, okay? When you go on the daily time frame, when you come on a daily time frame here, this is an expansion, okay? What categorize an expansion? It's sometimes a big candle breaking levels, okay? This is an expansion. It's always break a level. Now, what does characterize another expansion in the opposite direction? Okay, if you have two expansion like this is called a reversal, okay? Like we had here, this was a reversal because this expansion breaks structure. But remember, the higher time frame is fractal. So if this is a reversal, maybe on a higher time frame, this is just a pullback because we are going higher. You see? So you must know what candle you are targeting. This is the main question we ask ourselves every time. What candle am I targeting? So I mean, what expansion? Is it a H4 expansion? Is it a daily expansion that I'm targeting? And when you decide which one you're targeting, then you decide your style of trading. Because if you're targeting a weekly expansion, you will take a swing trade. But if you want to target a 1 hour or H4 or 30 minutes expansion, maybe you are scalping. So it's different, okay? So I explained to you the principles that help us trade, the candle formation with the phases. Now I want to dive in, okay, into liquidity. What is liquidity? I told you last time, liquidity is the resting orders that we have on different levels in the market. Liquidity can be found above swing highs and below swing lows, okay? Swing highs and lows. Liquidity is also found around equal levels, equal highs or equal lows. Where do we find liquidity again? Okay, they are above, always above or below weak supply and demand zones. Okay, we can also find liquidity where inside a range, I mean above or below a consolidation. Okay, I have to say above or below consolidation. We also have liquidity where in the trend lines. Sorry, my typing is trend lines. Okay, we can keep going and going and going and going. Liquidity is, just to say it in a simple terms, is wherever everyone wants to buy or to sell according to what they've been learning from the market. So liquidity resides in the market structure. So if you know market structure, you have to know liquidity. If you don't, you will get trapped all the time. Let me show you an example. For example, here, let me show you here. You have this, it's a very good supply zone. So everyone is thinking when price will come here, I will just sell, okay? Or someone else will say, I have a fair value gap here. Okay, so every time price will come here, every time price will reach here, I hope price drop. If you don't go beyond the basic knowledge and then you mark your level like this, and then when price comes up and take you out, you get upset and you say, oh, these other blocks don't work. Okay, let me tell you something. This was liquidity. Why? Because we already changed direction here. These highs cannot be respected anymore. Okay, let me show you another place where liquidity is. So another person came and said we have double top once, twice. What does retail trading say? If you have a level that resists price twice, just expect the third time to be the same thing. What happened here? If you prepared your sell like this, now you have a stop loss again. Okay, that's liquidity. Every place where people think they should buy or sell, or they can put their stop losses, is where liquidity reside. Okay, and that's how you should see liquidity. But now I need to go a little bit deeper in this subject and show you exactly how you can trade this. First of all, let me show you something. Imagine you have this. Remember, this is a build-up. Okay, price is building liquidity because the buyers are buying here and the buyers are buying here, the sellers are selling here, buyers are buying here. All of them are just trapped in this zone. They don't know where price is going. And at some point, price will just straight get out of here, take everyone who was putting their stop losses here out. I mean by that, someone who had a stop loss like this, selling here, is now out. Okay? But we also have some buyers. They thought that when price break this level here, I have to protect here and then buy. What does price do? Boom, stop loss. So in practical, what you should do, you should find targets, okay, liquidity zones, and you should also find inducement. What is inducement? Inducement is just when market sweep liquidity. Okay, you understand? When market sweep liquidity, you have an inducement. Let me show you. Here, you see all these levels are equal, right? What did price do here? Price swept liquidity. Why do we call it inducement? We call this inducement because people came here saying as soon as price will break here, okay, I will start buying. As soon as price break here, I will buy. Do you see how beautiful it looks? And every one of them was like, me, I will buy as soon as price breaks. Okay, me, I will buy when price come back into my demand zone here. So we have one buyer here, stop loss below here, resting orders. It's not activated yet, but is expecting for price to go up. The other trader is an active trader. He took the trade here, put the stop loss here, and targeted 2R. Okay? Are they right or wrong? We don't know. Only price will tell us. But look, they have been induced to buy. This is what we call inducement. It pushed them to buy. And then price did what? Boom, stop loss. When you have something like this, okay? When you have something like this, if it aligns with the higher time frame direction, you have found yourself an inducement. An inducement is our friend. Why? Because after an inducement, now we know where price is going. Because if we took out liquidity here, it means there's less liquidity here, there is more here, or here, or here. And remember the swing highs and the swing lows inside the range, below and above the consolidation. You just need to mark two things. Like I told you, you have the sweeps or the inducements, and you mark the targets. The targets are, like I told you, weak SNDs. Okay, supply and demand here. You see, weak supply and demands. Let's find ourselves one of them here. Supply and demand. Okay, so if price comes back in my zone here, what do I call this a zone? Okay, because I saw price break here, now I know price is bullish. Okay, then when it came, what did price do? Couldn't even break this structure. Very weak zone. This is not a supply and demand. You will call it a trap. This is a trap. You have to target traps. So you go from inducement to traps. This is how you trade. You take from inducement to traps. Why? Because price will always leave the inducement behind and then go toward the traps. Okay? From liquidity to liquidity. Now you remember this: external range liquidity and internal range liquidity. Price moves from liquidity to liquidity to liquidity every time. And if we take out this replay button here, we close it, you will see on the chart, if you look for every level that was equal, okay, you will see how price will come and take it out. And remember, I told you last time, every time you have a sweep of liquidity that couldn't break the next level, that guy here become a weak. It's a trap now. What did price do? Price came here, respected the trend. What is the trend doing? Going up, stopped inside here, fair value gap if you want, demand zone if you want, or even on the lower time frame, you can come and find yourself a sweep here, but you will target the traps always. The traps are those swing highs or swing lows that did not break the other structure. You see, if you have one, look, let me show you another one here. Which one? Yeah, even here, you can see it. You can see it. You see this one? After touching here, where did it go? Nowhere. Price came back and took it out. If you have a sweep a break structure. When price comes back, it will go in the direction. That's okay. Okay? But as soon as you have a sweep that couldn't break structure, okay? Here it broke. That's why price came and continue lower. Okay? You have to find yourself inducements. Sweeps are inducements. Inducement here. You have a level that's taken out quickly and then price came back, inducement. You have a level here, nothing induced. Yeah, but it came and induced here. This is an inducement. Where's the next trap? Here. You can see it did not break any structure. Price will always go from liquidity to liquidity. Here, equal highs, but this one is a good level. Why? Because we swept liquidity and broke structure. What did price do? Came back here, respected it, and go lower. Sweep, break structure. Price came back inside and respected it. Sweep, break of structure. What did price come do next? It came here. But you have to watch out. If you have a higher time frame reversal, all these levels will be taken away. Okay? So the main thing you should understand about liquidity is liquidity will tell you where to go and when to wait, because sometimes we are too eager to enter. Okay? Enter after a sweep. It will help you avoid being swept, because if liquidity has been swept, now there's no more liquidity on that side. You can go in the opposite direction. Look at here. You have swept this liquidity. We broke structure here. Okay? And when price came, sorry guys, I just click on the audio. I don't know what I did, but okay, it's okay. When you have price here, swept liquidity, broke structure, continue higher. This is what you will see on a lower time frame. But if you go on a higher time frame, let me go now here. Let's go on H4, for example. I'm gonna remove now the session breakers and show you something here. Every time you have an expansion like this, okay, if you have a sweep before that, you have found yourself a level that is protected. You see, price couldn't close below this. Every time you find yourself an expansion and there were a sweep here, price obeys, never come and close it. So until price comes and close below it, you just buy. You just buy all the time, okay? These are tips. Every time you have an expansion and then we have a sweep before, price will obey that level. You see, it obeys even once here. Okay? And then there are other factors that you should take in consideration. But the main thing here is remember how the candle forms, remember the different phases, and always think about the liquidity. Liquidity is simple. You have inducements. It means what? When a level that was important got swept by a weak or a small candle close, and then price reverse directly. This is an inducement. Price will always come back inside to get the trade. So if you find yourself inducements and then you wait for price to come back in the inducement and take a trade, what are you doing? What are you saying basically is, I don't think there's liquidity here, so I don't think price will have to go there. Why is there no liquidity here? Because everyone was here, was taken by surprise. That's why it's quick. Taken out and then price comes here. Nobody had time to sell. They were all trying to buy. Okay? Remember, also, a supply zone like this, it's stronger when there is liquidity below it. What does that mean? It means when price will take out this liquidity, it will have to stop somewhere. It will always stop at a supply zone or a demand zone. Look at this one. You see this liquidity swept here? Where did price stop? Here. You see, this is a demand zone, and it does that all the time. So when you have a supply or demand zone, always watch out if liquidity has formed under, below it, or above it, and then when price sweep it and break this, okay, this is confirmed to be a level that will resist price later, like we did here. Swept this resisted price later here. You don't need much. This trade could have saved all week. It's H4. You could have saved the week. And if you got yourself two trade like this, you will make a big return. See, guys? So liquidity is the key to the market. When you come in a chart, ask yourself, what is the last sweep of liquidity on the time frame that I'm trading? Oh, okay, I see it. Now you know where price is going, and you know where price is not going. But price doesn't go in one direction uh, until the end of time. No, you have to know, like I told you, what candle, what expansion are you targeting? Because as soon as we have the build up, if we have an inducement, then the sweep, what does that mean? Price has swept liquidity on this side. We need to continue on the other side. So, for yourself to be safe, find yourself a trap or a target on the other side. So, you will go from inducement to the trap, from inducement here to the trap. You see the trap? Weak level. Why is it weak? Never broke structure. Push price, stopped in the middle, came back, created liquidity. All this is just a build up. Once we swept it, price came up, but we have this level. Below it, we have liquidity. Price took it out. What do we target? This trap. Inducement to trap. From inducement to trap. Every time you find an inducement, ask yourself, where is the next trap? Because they are all liquidity, but one will help you see where the market is going, and the other one will show you where the market is coming from. The market comes from inducement and is going toward a trap. Okay? It can do the other way around. But what I'm trying to say here is it's easier to find an inducement than to find a trap. So find an inducement first, and then you can find the trap later, because the trap will be your target. You see that? Um, I really hope you understand what I'm saying here, guys. Okay? If you understand what I'm saying, type zeros in the chat, please. I love to do that all the time. Yeah. So um, I really hope you got something, guys, because sometimes you are like very pissed, like, okay, I have this trade. It was good, man. What happened? Here, like this. Price came back, my stop loss was clean. Okay, I entered here, and then price took me out. My question is, what were you doing during this time? What was your target? If this was the inducement, what trap are you targeting? The trap must be a level that respected structure but never broke structure. So this level here is a trap. Everybody who entered here will get out with a stop loss. All of them, they targeted here. They said, okay, price will come from this supply zone, and we target this low. Okay, price will come here, but before we do that, okay, you see how price stopped in the middle? So when we are entering from the inducement, our target is the trap. From inducement to trap. So you need to get out. What were you waiting for? Did you think price will continue here? No. You need to close your trade. You need to have a target. I will always tell you to do 1 to 3 or 1 to 4. Okay? And if you have a 1 to 2, get out. For those who does not understand the ratio, risk to reward ratio means what? It means what I'm risking, what I'm able to lose, what I accept to lose, okay, is here, and what I want to win is this big, okay? So this is the call for another day. Today we are over. My call will end up very soon. Go to the YouTube channel so you can watch this again. Thank you again. Thank you, everyone. My time is up. God bless you all. Let's keep trading. Let's keep sharing the knowledge. And yeah, let's meet on Thursday. Okay, guys? Thursday, 1 p.m., I will be on the call. We're going to take trades live together for the New York afternoon. Okay? New York PM session. Thank you again, guys. God bless you all. Yeah, let's see. Yeah, on Thursday. Thursday, guys. Bye bye. And I will post this on YouTube right now for those who want to rewatch this call. Thank you again, guys. Liquidity and candle formation, don't forget that. And then trap and inducement. Traps is a target. Inducement is from where the price is coming from. All right, bye bye. Let's talk later.